You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hello again, I'm Don McDonald. Welcome to the show, Talking Real Money. Tom's not with us again this week. I could never get him to come back to the studio. After you send the boy across the border, they built the wall, and Tom couldn't get back in. We sent him across to cover all that's going on in Mexico, and they didn't let him back in the country. I don't know what happened. So, is he joining us by
Don?
Special connection? Yes, we have a special connection.
Yes, it is. Yes, I'm so excited to be here.
Is everything okay?
Kinda. Yeah. I feel like it's been extended vacation, which I guess it has been, right? I mean,
it has been. You've been gone for like 6 months.
I know. Barely.
Well, it feels like 6 months.
What year is this? Yeah. So
we've missed you so much. It feels like
bet.
6 months.
I'll bet you did. I'll bet you did.
I didn't buy that for a
second.
So
yeah, no, it's good to be back. Had a great time on various trips, and but I'm glad to be here. Yeah.
Right, that's Tom, folks. For those of you who've forgotten who he is, I'm Don McDonald. That's Tom Cock. He listened to the show while he was away.
I did.
Except for a couple weeks ago when it was only 90 minutes long, and you got on late.
That's true.
He went, wait, we're playing basketball?
I was in the immigration line and tuned in on Listen. Is it Listen Live? I always forget the app. But anyway, and you weren't there. It was like pregame show.
Yeah, I know.
It was they started the pregame show for the Apple Cup like a week early. So there you were. So you were gone.
Right.
Yeah.
I like them to start early.
Yeah.
I was going to say something. I think I remember what it is. The phone number. We live for your calls. We do every week. Tom's been like 3 weeks. I haven't talked to anybody on the phone about money. Oh my gosh. Well, actually, he has at the office a little.
That's not true, but okay, yeah. Mm-hmm.
But he does, like I do. Look forward to Saturdays when we can take your calls live and actually chat with you about money issues, about making money or spending money or saving money, particularly investing money. And the number is 855-935-TALK. That's 855-935-8255. And just for you, a little Thanksgiving weekend treat for all of you. Call and ask a question, and we will whisk you off to the retirement event of the year, the 6th annual Retire Meet.
Hard to believe.
2020.
Hard to believe. Yeah. That's coming up February 22nd in Bellevue, and we already have all the speakers lined up. Everything's confirmed. And you want to learn more about it, you can go to retiremeet with an E.com.
With a double E, yeah. We have the inimitable Pablo Merimon.
Yes, he'll be back.
Live from Mexico. Everybody's in Mexico for some reason.
He showed up at the office last week, so we took him in. We got custody for, I think, half of a day, and somebody else
we got the king of water polo, Apollo Lupescu.
Who really is maybe the most gifted. I think Paul's gifted speaker, but Apollo is terrific.
Yeah.
Just really, really good.
Very good.
Yeah.
And, of course, we have Don McDonald and Tom Cock.
Yeah,
they're both speaking?
Well, they pretty much have to put those guys up there.
How did that happen?
And but the format is different this year. Just real quick, we're doing a morning session that's the same as the afternoon session. So you only have to come for like 4 hours, and we just hit so many speakers. Boom, boom, instead of the laborious 6 or 8
hours we did last year.
So that means you and I are going to have to go twice as fast as we have in the past, which won't be a problem either. So,
well, actually, I'm going to record mine, and then I'm going to turn the speed up to 1.5, 2 times.
Yeah, that sort of thing.
Actually, I heard a commercial on the radio the other day. No, yesterday I was driving, and they ran the speed up to double time. It was like, are you kidding? Nobody can talk that fast. And it was, of course, a financial scam.
Yeah, or the Trading Academy or somebody trade real fast.
Yeah, no, this was real estate. This was real estate, where you're guaranteed to make 8% per year. Guaranteed, backed by real estate, folks. Real estate. You know it's real when they have real before estate.
We'll talk about Woodbridge in just a little, because they were the record setter for the SEC, by the way.
Were they?
Yeah, they set the highest fine, I think I said, in history.
Wow.
The SEC just announced a couple of weeks ago that they took in, their sanctions were for the last year, $4.3 billion. The largest fine, $892 million against Woodbridge. Oh, Woodbridge. By the way, Woodbridge is
I love Woodbridge.
Woodbridge's president, a guy named Robert Shapiro.
Robert Shapiro, how much time's he doing?
Well, he's got 25 years in a parallel criminal case, but the SEC obtained a $100 million fine against him. His attorney said Mr. Shapiro is unlikely to be able to pay that sum.
Yeah.
So I guess everything in real estate is not guaranteed.
Yeah. And Mr. Shapiro is spending some serious time in the Huskow.
See, so at 8 cents an hour making license plates, how long does it take to create $100 million to pay everybody?
I think they measure that in light years. 855-935-TALK is the number. Tom is back, and your questions are what we want to answer. So give us a call right now.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's really important. Hi, I'm Don McDonald. Over there, Tom Cock. This is Talking Real Money. We're glad you're there. We hope you listen every Saturday at noon on the West Coast, or you can listen online. Starts at 3 on the East Coast, and the podcast airs anytime, all the time, at talkingrealmoney.com or at Apple Podcasts or Spotify or all of those big podcast services. They all have it. So listen in and then call in at 855-935-TALK. You can call us today live if it's Saturday, the 30th of November.
It is.
And, we'll give you a free ticket for one person. We'll give you $10 off, which is the cost of a ticket, to go to Retire Meet in February 2020. You can also use that for a two-person ticket, so it'll only be $5 for two people. So it's quite
and it will be, here's a guarantee, it will be sold out again. It's 5 years. Every seat has been sold 5 years running.
Every seat, 5 years running.
Amazing. That's like, it's a share or something. I mean, every seat sold. Come on.
For some reason, people like it. They say good things about it.
Indeed. And by the way, speaking of things to come, 'tis the season, right? I mean, we're in the holidays now, right? 'Tis the season to look at the future and see how dark it all is, how ominous.
We hate
how ugly it's going to be into the future, because I love this headline, which you found from the New York Times.
Yeah.
Your portfolio is probably doing great. That's bad news for the future. And I always thought more money was good news, but apparently it's bad news if you're the New York Times.
Well, I'm trying to find it.
Well, I mean, and here's the first line. I even struggle with the first line. In many ways, says Neil Irwin. In many ways, 2019.
Oh, Neil Irwin annoys me.
Neil, in many ways, he says, 2019 has been a miserable year for the world economy. Yeah, I hadn't noticed the high unemployment. I hadn't noticed the wacko high inflation. I hadn't noticed the no growth. I mean, really? A miserable year? Miserable? No. 2008, miserable. 2001, pretty bad. I mean, there are miserable years. This is not one of them. But what he's trying to tell you, I hate even more, because what he's saying is, because stocks and bonds have made money, and by the way, I think he said something here. He tries to say the current level of longer-term interest rates in every advanced nation, this negative rates, means the world's going to remain in a low-growth, low-inflation mode for many years to come. How in the world does he know that?
And he states it as fact.
I know.
And that bothers me. And I have a running. He of course wins because he's in the New York Times. And I'm just a commentator.
Yes.
But I comment on a lot of his columns, and I commented on this one. And as a matter of fact, it was, last I checked, it was like the 4th or 5th most popular response to Neil. And so I'm just going to read it.
This is your response to his. By the way,
this is my response.
So let me read
NewYorkTimes.com.
Let me read the last line, because he's portending the future will be negative. By the way, he says for all asset classes.
Oh yeah, all
because
of them.
we're in a bubble with all asset classes, because bonds and stocks have made copious amounts of money this year. He says all of which means we should enjoy our big market gains now, because they're essentially presaging a gloomy, if not disastrous, economic decade to come. Not just 1 year, decade. Don?
Yeah, well, let's just here you go. This is my response. Yet another financial article that implies some magical ability to foresee the future. We continue to cling to our anachronistic beliefs that just because someone is a market analyst or, quote, a senior economics correspondent, they have prognosticative powers. This article is the perfect example of the misleading nature of predictive press. The future is never foreseeable. It is merely foreguessable. New word I just made up. And I say that the use of future tense to describe what has already happened is wrong. Markets are never higher. They were higher. They're not higher. To say that the markets are essentially presaging a gloomy, if not disastrous, economic decade, and that's a quote from him, is stating something as fact that is merely the author's guess. And I put in a little note to the editor. Editor, please consider that statements like this are misleading and could harm investors if actual conjecture is taken as gospel. The future in every aspect is both unknown and unknowable.
And this is the part that upsets me, because people do read this. This is the New York Times, all the news that's fit to, right? I mean, this is the place,
right.
This is
It's
newspaper of record, whatever accolade you want to. And people read this, and what do? They act on it. They got to do something. All asset classes are at record highs. I got to get out. I got to sell, etc. And that is exactly the wrong thing to do at any time. Your portfolio should always be built for the upside and the downside. You do not have to do anything if you have a properly constructed portfolio.
But you know what's really interesting, Tom? I got a response to my reply from a guy in Westchester County, New York.
Oh.
Who said, so what do you do with your money and why? How do you make your guesses? That's a great question, isn't it?
That's a great question. Yeah, right.
How do you make your guesses? Well, right. This is what I don't get. By their very nature, guesses have no value. None. Your guess, literally, remember the old saying? Your guess is as good as mine.
Yeah.
Yeah.
So no, that's
silly.
That's and by the way,
yes.
if you're going to make an educated guess based on either Neil or guys that are academics that have written white paper, peer-reviewed documents,
you mean
back at
data,
like evidence-based sort of thing, for which one would you give more credence to? Yeah, I'm going to go with the academics on that one. Number two.
The academics say the market goes up more than it goes down.
There's that, and there's also this whole idea that you're going to outguess it. We don't know anybody who outguesses the market, really, ever.
There is no evidence that anyone does, not even Neil.
Yeah, I don't think Neil's going to be on your Christmas card list.
No. 855-935-TALK is our phone number. I make people mad all the time. 855-935-8255. But I make people mad in the cause of the greater good, because I make people mad so that you are all better off.
Keep saying that. You'll feel better about yourself.
I will. I'm trying. Luke, you're up next. Welcome to Talking Real Money.
Hey, Luke.
Hey, thanks, Tom and Don. You guys have a great show, and I would highly recommend Retire Meet. I went there last year, and it's a very wonderful way to learn a lot about stocks and bonds and investing.
Thank you. That's very
cool.
kind.
Thank you.
How can we help you today?
I hope you get tickets. Well, my question is about prognostications for next year's. I'm looking at Wall Street Journal, this Kane Otani, stocks projected to slow. Analysts see no repeat of 2019's gains.
Yeah.
It's like, so what's the difference between rebalancing and being defensive, that is timing the market? Because I'm probably a couple years from retirement.
Yeah, no, that's a good question. So because rebalancing is a correct. In other words, this year, we'll spend more time on this because this is a great year to talk about rebalancing.
It is a great year to talk about rebalancing, and it is a powerful, powerful tool that sits, and it's immediately available to all investors.
Stay
It's
with
just
us,
great.
Luke. Yep.
855-935-TALK is our number, 855-935-8255, and call us and get a ticket to Retire Meet 2020 in February.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
After an incredibly long hiatus, Tom is back with us here on Talking Real Money.
You know,
I'm Don.
I deserve
That's Tom.
every bit of that hassle because I did miss 3 Saturdays in a row, which I did not intend to do.
In a row.
You know, one was kind of an emergency thing because it was my brother's
it's okay.
birthday.
Well,
I had to miss that one.
Oh, yeah, you had to have emergency birthday surgery.
That, but then number 2, I knew I was going to miss that Saturday because we were going to Mexico. And what I didn't know, I thought I was coming back the following Friday.
Oh.
And this is what happens when somebody else in your household puts the, no offense, because it was a great trip.
Are you throwing your wife under the bus?
Yeah, pretty much, which I really shouldn't because the trip was absolutely unbelievable.
Well, it looked like you had fun.
We had a great time. But anyway, I thought I was going to be getting back to the show.
Your family probably more than you.
Well, after about 3 days, I was like,
you don't do vacation well.
I read the 2 books I had, and I was like, okay, now what's? How many theme parks can you go to? Anyway, it was a great.
All right, so we're talking with Luke about timing versus rebalancing.
Yeah, this is important. Yeah, so
it is.
This is a great year for a rebalance because I just looked this up today. The all equity diversified portfolio is up 18%. Year to date. By the way, we don't know what will happen in December. Remember last December? That was not a whole lot of fun. It was kind of a bad time. So
it was terrible.
Yeah, and the bond portfolio. By the way, the intermediate term bond fund we use? Guess what that's done year to date, Don? He doesn't look at this stuff.
Wait, I don't look at it at all. So this would be a total guess. I'm going to guess up a total return of 8%.
8.3. You're good, and the tips up 7.8.
Isn't that now? Wait, before we get back to the rebalancing thing, I just want to make a comment on that. Do you remember last year and the year before that and the year before that and the year before that when all of the experts said bond prices are going to fall because interest rates have to rise?
They have to go up. They have to go.
They didn't.
Anyway, so here, this is great because and Luke is exactly right. And by the way, we know Luke. He's been to our other events. He's a smart guy. He invests at Vanguard. Sharp character. So thank you, Luke, for following our advice. But here's the thing. This is exactly the type of year, I mean, you'll still look at this if you do this at the end of the year, to sell things that have gone up more than the other parts of your portfolio. So in this year, you'd be selling more stocks, depending on your stock-to-bond ratio, and buying bonds because they haven't gone up as much. That's rebalancing. That is not market timing, because what timing is exactly what your friend Neil is talking about, because he's telling you, be scared of the future. Something bad just around the corner, so you got to get out of stocks. He doesn't even say what to go into, by the way. Got to get into something else. What about REITs? Oh, that's right. They're up 23% this year. You wouldn't want to jump into those. They've had a good run, too. So that is completely different.
Oh, wait.
You know.
Didn't Neil say all the asset classes were...
Everything's in a bubble. You got to do something. So does that help, Luke? I mean, so you'd be doing it based on mathematics.
You see the S&P 500 up 25%. It's just like, boy.
I know.
And so... That helps a lot.
By the way, you raise a great point. You're a smart enough guy to know this. You raise it. The S&P, again, has been the best performing asset class. So if you want to delve down into those asset classes, you'd be selling some of that and buying things like emerging markets. You'd be buying things like international small value, the things that have not done nearly as well. Rebalancing, taking some of those winnings off the table and rebalancing your portfolio.
Thanks for the call, Luke.
Thank you very much.
No, thank you. Thank you for listening.
Hey, Tom, that actually brings me to a really important point, and that is if you have an investment advisor or if somebody who's guiding your portfolio, a good investment advisor should every single year. Not just say you've got to adjust your stocks and bonds, but you've got to, as you just said, emerging markets haven't done as well.
Yep.
So you've got to sell your large blue chip growth stocks and buy some of them. You're going to sell some of them and buy some of the stuff that's down, like the emerging markets. That is what a good advisor should do. And I honestly believe that somewhere in the 90+% range of advisors don't do that.
No, they don't. And sadly, again, because they're making a bet that those blue chip growth stocks will continue to go to the moon. By the way, they make up such a big part now of the overall S&P 500. It makes me nervous. I'd be wanting to take some of that money off of the table.
But you don't time it. You rebalance it, and that is the whole point. 855-935-TALK. That's our phone number. Give us a call. Get tickets to Retire Meet.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
If you don't call, I'll just play the music over and over and over again. This,
You
by
are
the way,
obsessed with
this
that.
is my
Put it away.
new.
Put
This
that
is
away.
my retirement job. I talked to this guy about me doing this down. He's very good. Listen to him.
Do you know how to play the trumpet?
No, I don't. I'm gonna be the singer guy. I could.
That's not happening either.
No, okay. I thought it was on it.
Yeah,
I guess not.
I love that. What key is that? Is that the key of Q?
Key I can't get to. That's.
All right. Hi, everybody. Welcome back. I'm sorry Tom's home.
Yeah.
Because now we're going to listen to mariachis all the time.
How do you think you feel good because you're out of state? How do you think people in the office feel? It's that or
have you been playing that in the office?
Yeah, it's that or Kelly Clarkson. It's got one or the other. They get their choice. So
at least you've stopped doing the rap from Succession.
oh my goodness, that got such poor reviews. People did not like
your
that.
rap?
They did not like the rap.
Yeah, I don't blame them.
I've kind of put that.
One, it's rap. Two,
Yeah.
it's you doing rap.
It can't get a whole lot worse. Yeah, it didn't.
All right,
It didn't go well.
I want to share with you a telephone number. Kind of important because it's where you can get questions answered and answered honestly. We're not going to try and pitch you something, sell you something, rip you off. It's
Boy, we could
855.
talk about other local shows.
We
in a minute.
will.
Good
Oh,
Lord.
we will
Yeah, 'cause
actually.
Chuck Jaffe weighed in on that national column on our local station. Go ahead.
855-9. You want some more mariachi music? 855-935-TALK. 855-935-8255. Call. Ask a question. Get a free ticket to Retire Meet. Currently a $10 value, but eventually this is a ticket that appreciates because by the time if you come to the door and there's still tickets, it's $25.
And
what kind of return on your investment is that?
And you try and buy them on the secondary market, big money.
Oh
Big
yeah,
money.
there are people outside
Top
the West
dollar.
End are going to be hawking those things. They're just,
We already have the website.
you
set
got
up.
your Retire Meet tickets.
So, I mean, we get some interesting questions. And by the way, I want to compliment you. When I was on vacation, I was listening to the Daily podcast, which is quite good. A lot of people may not even know that, but it's really good. So you have a little bit of, news kind of stuff. You got a call in there. It's interesting. It's quick.
Oh, and by the way, just speaking of which, you can, by the way, if you don't get into the show, you won't get the free ticket, but you can always get your questions asked.
Yeah.
You can always get them answered.
Right.
All you have to do is just call the same number, 855-935-TALK, 24 hours a day, 7 days a week. Leave your question. We'll put it on a future podcast.
And this is a question emailed into us from a guy named Mike, who's in, I believe it's Colorado somewhere. Yeah, 303 area code. Is that Colorado?
That's Colorado.
Okay, I thought so. Well, he says in the email, my wife's a teacher here in Colorado. I guess I could have figured that out. But here's the question.
Yeah, you read it, and it helps.
Turns out. Here's the question. She can use money to buy more years of service to get a bigger pension.
Right.
So in this case, the buy-in would be $87,000.
Okay.
And that, if she does that, she gets 5 more years. Here's where it gets interesting. If she does nothing and takes the pension, I think it's at 60, she gets $22,000 a year. If she adds the 5 years, she gets $34,000 a year. That's a $12,000 a year increase. That sounds like a 50% increase to me.
Wait, it sounds
Which
like
doesn't
somebody
sound
didn't
right.
do the math right.
Well, okay, but just in a general sense. So he's
Well,
taking.
wait, so if I just want to do the math here, so she adds $87,000.
Yep.
And when is she retiring?
If she retires at 60,
How many years from now is that?
That's
they say?
I think it's 6 years.
6 years.
Yep.
And
she adds in the 87,000, and the difference is 12.
Let's say she makes 6% a year.
I use 5% to try to be safer because we are heading into a very gloomy time, as you know, for stocks and bonds and real estate and everything else.
Wow, that's too generous.
It didn't make sense to me when I read the numbers.
The money would grow to about $125,000 at 6%.
Yeah, I had it going to $106,000 at 5%. So
okay, so 120. Let's be generous. $125,000, and she retires at 66 and gets an extra $12,000 a year.
It didn't make sense, but
that's
even,
like 10%.
Yeah, I know, but just setting that at the dollars and cents aside, just what about the idea generally of buying additional years of service with cash? I kind of struggle with that because in retirement, a lot of times you want liquidity. Number two, around a pension, there's no guarantee that the pension's going to be good for you. There's an aspect of risk there. Then if you have the cash, that's less risk. I don't know. I struggle with all that because it comes up from time to time. But I don't think his numbers, Mike, you may write us again. I don't think the numbers are right.
If the numbers are right, then that's the kind of deal I would take. I mean, absolutely. If they're just not doing their math right. 855-935-TALK is our number. Please give us a call.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Really, truly important stuff is what we're talking about here. This is your life and how you manage the financial part of it and how you can do it a whole lot better, not get ripped off, not get taken advantage of, not pay high fees and commissions, make more money, and enjoy your life more. 855-935-TALK is our number. And speaking of enjoying life, that's one of the goals of Retire Me, is to help you learn how to enjoy a better future. And if you call and ask a question, you'll get a free ticket to Retire Me 2020.
Worry less about all of these things, which we find is a burden to many people.
It is a burden.
No.
I mean, no doubt about it. 855-935-TALK. Give us a call, 855-935-8255. And Julie, you're up next. Welcome to Talking Real Money.
Hi, Julie.
Hello. It's nice to talk to you.
Thank you.
I've never heard anyone talk about this particular subject. I have a 4-year-old and a 7-year-old grandchild, and for the past 4 years, I've been making contributions to a for their investment account, and I'm putting it in a uniform transfer to minors. And each year I do a letter that goes with that, which is to tell them why I chose a particular stock, but also why it is that I decided that investing is something that is important to me to do as a grandmother.
Well, I love that part of it. I don't love the individual stock part, but I love the fact that you're doing something for them. That's great.
It's an individual transfer to minors.
Yes, no, I understand.
No, but you mentioned that you were buying individual stocks and telling them why you were buying the stocks.
Some of them are individual, and some of them are index funds.
Okay.
Oh, good. Okay. All right.
So what is your question?
So each year in this letter, I attempt to kind of give them some advice, some financial advice, which one of those is about investing into their future, and that part of money is investing. 2 questions. One is you've already answered in terms of advice for long-term investing, because this is something that is for them in their adulthood. And so if you have some advice there, and also if you have any nuggets that you would like to suggest to me in terms of those letters, I'd appreciate your thoughts in terms of handing over a financial life that's fraught with some education for younger people. I feel like we don't do a very good job of educating younger people in terms of managing money.
Ooh, I'm so tempted to get to sell them to. I'm like, should I sell my book? Should I sell my book? No, you know what? Why don't we give her a book?
Okay, we'll give her a book
to give to her grandkids.
Yeah,
what do you think?
Yeah,
that's what I would say.
I mean, young right now, you can put it.
But
in
for
an
later,
envelope. Yeah, that's true.
For later, just because you to tell them in the letter, they're not going to pay any attention. You know, it's like, yeah, you can tell them that if this was invested, if X amount was invested 30 years ago or 20 years ago or whatever the period is, today it would have been worth X. I think that might have some impact when they see that after 30 or the value of that over a period of time. Just give them some numbers.
Yeah.
Yeah.
I think the other one you struck on briefly was the how to invest. Because I think many people think investing is trying to pick stocks, trying to find the thing that's going to do best over time. And as you know, if you've listened to the program, we conversely believe that the best thing to do really is buy an index fund, keep your costs low, and invest in a diversified portfolio. We don't know of anybody who can pick the right stocks. In fact, the evidence is most people cannot. Even the experts can't do that. So I think those are both worthy. I guess the other part still would be, wow, I mean, if at age 18 or 19, what piece of evidence, what piece of information can you provide to somebody at that moment in their life? And I think what you struck on is exactly it. Investing is about the future. It is about taking some of your capital from that day and setting it aside for the future. I think that's a great lesson to give any teenager or somebody in their early 20s.
But, I really believe it almost takes that what I mentioned earlier, that past look, because you can't tell them in the future what the money they have today is going to be worth. But we find it very valuable in our classes and powerful in our classes when we tell somebody, if you had put $10,000 in just a balanced fund 40 years ago when you were in your 20s and you left it until you retired, that $10,000, nothing else added, made you almost a millionaire.
Yeah, it's a lot of money. By doing absolutely, as you said, nothing. You didn't have to read the Wall Street Journal. You don't care what's on CNBC. Your money's just there growing. Yep.
Does that help?
Like all of that. And I will tell you that some of the investments I've chosen haven't necessarily been financial investments.
What other kinds are there?
So let me give you an example.
Yeah.
They have a cousin that was diagnosed with leukemia lymphoma. Mm-hmm. And so I did an investment in Seattle Genetics.
I know the firm, yes.
Oh,
got it, yeah.
Okay.
Because
so you're adding charity to it.
Of a sort.
Yeah,
I did a stock investment in that, and actually it's done very well. But my explanation to them is sometimes you invest in those things that you want to succeed.
Yeah, you're supporting. I mean, in this case, you're supporting research.
So you bought the stock.
Going to make people's lives better.
Yes, I bought some.
Yeah.
Yes, I bought some stock in Seattle Genetics and put it in their portfolio. And so that was their letter from last year. Is that, and that stock has actually done very well, but that wasn't the complete goal of that particular investment.
Yeah, I understand.
So you can see, I've been a family therapist for 40-some years, and so part of this is that it's also the legacy of family.
And I think that's a great legacy. You're leaving a lot of things. You're leaving them wisdom, you're leaving them direction, and you're leaving them a better financial future.
Yeah,
that's pretty powerful stuff. Now, once they have jobs, I have one other thing I think you should do for them. Once they have jobs, every holiday make a contribution to their Roth IRA. Help them pick a great Roth IRA with Vanguard or someone, and every holiday, and then you tell all of the family, let's all make contributions to the kids' Roths to their future.
That's better for them than the Uniform Gift to Minor Act because the Roth grows tax-free.
But they do need income.
You do got to have income before you can do that. Julie, thank you. This has been one of our better calls, I think, because you really raised some interesting issues. Yeah. And it's very thoughtful. I love the fact that she's not just giving you money. Got to think.
Powerful this time of year when everybody is out in line at the mall spending a lot of money on a lot of junk that is going to be very quickly forgotten.
We have let's talk about that just for a moment, because this just came up at home yesterday.
Really?
Oh,
what a surprise!
Shocking.
Yeah, you have a child.
I asked my wife, how much are we going to spend? Fill in the blank, and she gave me the number, and I said, no, we're not spending that much. Which, of course, why not? I said, well, because we don't really have it. So that,
but here's a lot of junk.
I know. Here's what I said to do. I said, okay, show me the line by line. Here's for this. I haven't done that yet. I do that. It slows her down a little bit. Because you don't just get a blank check. You got to say, here's what I'm at. Because it drives me crazy.
Okay, well, that's like budgeting. That's just money 101. 855-935-TALK's our number.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And do not miss Retire Meet. If you can't call us to get your free ticket, they are deeply discounted right now as we do early on. But this is the earliest you've been able to get them and the least expensive. Right now, the early bird tickets are just $10, and you can get those at retiremeet.com, retiremeet.com. This is our 6th annual Retire Meet. We've got a lot of great speakers, tons of great information. We're going to try and do it in 2 sessions so that you don't spend an entire day there. And you can get tickets right now online at retiremeet.com, retiremeet.com. And if you want one for free, then you can call the show on Saturday and call 855-935-TALK or go to retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.